Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, Thursday's session left the Australian dollar somewhat mixed after taking the topside challenge towards 69.95 for the third attempt, rejected and ended posting an inverted hammer. In light of the pattern, it still remains heavy, target of 68 figure 35, which is where the 60-day moving average is, and any upside attempts should still struggle towards 69.45 to 69.95. Do be on your guard though, towards 68 figure 35, where the 60-day moving average is, could actually stage a rebound and no doubt probably continue in this 68.70 cent boundary. Nevertheless, the market has demonstrated a failed upside attempt, and therefore I'm looking for a downward move, with the immediate target seen at 68.80, and as I mentioned, towards 68 figure 35. On the economic front, the release of the Reserve Bank of Australia's State of Monetary Policy revised its forecast for its core inflation and wage growth and warned further increases in interest rates would be needed. The latest somewhat hawkish quarterly statement of the monetary policy to the bank's detailed economic thinking and forecasts indicates no appetite to return to supersized rate moves. However, the bank did surprise many of us on Tuesday by stating its expectation that further increases in interest rates will be needed over the months ahead. After rising its cash rate by 25 basis points for the ninth consecutive time to a fresh decade high of 3.35%, this now brings the total tightening since last May to a whopping 325 basis points. Looking ahead though, the Consumer Price Index, or the CPI, is running at a 32-year high of 7.8% and is expected to only slow to 6.7% by June this year, up from a previous forecast of 6.3%. It should then slow further to the top of the RBA's target range, around 2 to 3% by mid-2025. So still a lot of work there to do. Nevertheless, the market is still expecting at least another rate hike in March. Viewing the euro dollar, we can see the market took the challenge to the upside and mounted to little. And from that, still poses a threat to the downside, with the current target seen around 106.20. It is assessed that we may see a slight bounce from there, but if the dollar continues to hold above 101, where it is at the moment, 101.30, then we could see a rise up towards 104, and this would put quite a heavy weight on the euro, maybe taking it down to 105. Any advancement still looks for a cap around 108.15. In light of the pattern that we saw a rejection of 132.80.90 earlier this week, I feel that there is further upside potential given the fact that we broke down but didn't take out the midway point from the RSI. So for the rebound, let's see if we can see another upward challenge, that is towards 131.85 and on to 132.80.90. The broader call is that a clearance of this level would give further scope towards 134 to 136. Sterling took the challenge to the top side of the range around 121.45 and clearly was rejected. And from there has put us a slight buckle in the RSI and therefore could see any further upside attempts fail, and that would mean that we could looking down towards 120.90 as a potential target, with the immediate target at 121.65 from the base holding around 119.55. The call to the outlook for gold is negative if it breaks 1,860. We're right on there at the moment, and a close under there would give further scope towards 1,820.26. With no safety net seen until that level, we may see a very sharp down test due to the fact that we did clearly reject that topside level 3 times, or close to 4, at 1,881. And finishing up with oil, the market took the challenge to the top side level. That was around 78.2045, but no follow-on was seen, and the technicals are somewhat buckled. If this is an indication that the market has failed to the top side, then we are looking for a pullback to 75, 60, 80 and reassess, but still locked within the boundaries of 75, 60 to 82, 78, 60, with $82 a barrel seen above. That wraps it for today. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.